Hello everyone, Andrew here from Peak Capital Trading. Mike is in the back. For those of you who are part of us, Mike is working from the office today. Anyways, today was an amazing day for me trading wise. Very profitable, very good. I traded leveraged ETFs, TQQQ and SPXL. And SQQQ, sorry, actually I didn't trade TQQQ. I trade SQQQ and SPXL. So leverage ETFs are the instruments that you can trade the indexes. Instead of indexes, you can trade them, and they're more capital efficient. Like if Nasdaq QQQ goes up 1%, TQQ goes up 3%. And also they have reverse too, SQQ, like a short. SQQ dropped 3%. So today market was gapping down, obviously because of the fear of recession and tightening the economy. And I was expecting that the market is going to continue selling off. Therefore, I went long SQQQ, which is essentially the short for QQQ, which is the Nasdaq sector. And it was really, really good because the pattern was really nice, the volume was great, and I shorted the market by going long SQQQ. And then the SPY sold off at around the level about 390. This was the level that on November 1st we were holding. And then I decided to take a reversal from that level. I could buy a SPY for the reversal, or I can just buy a leverage ETF, in this case SPXL, which is the long for a SPY but on a 3 times leverage. These are more capital efficient to trade. Why? Because for example, $1,000, if the SPY moves 1%, you make $100 or $10, but for SPXL, you can actually have 3 times of that value in your account. A lot of people are reading a SPY and trading a SPY or trading QQQ. But if on an intraday, just for day trading, you can actually trade these leverage products. But the disadvantage of leverage products are decay over time. If the market, for example, is continue going higher years and years, the leverage for the reverse one, they're significantly going down. Or if the market is continue going down, like what we are having in 2023, even the long ones like TQQ or SPXL are going to continue dropping down much faster because they're leveraged, they're derivatives. Another lesson that I show in the recap is that the levels on these leverage products on a daily chart doesn't have any meaning. A lot of people are trying to put the levels and channels and trend lines. These are derivatives. They don't have any characteristics or personality by themselves. They just follow daily the indexes that they have. It's like buying clothes or sizing your shadow. It doesn't matter, it's following you. So you find the level on the indexes and then you trade them based on the levels of the indexes on TQQ or SQQ. I hope you like this recap, and if you have any question, feel free to leave it here. And if you like our channel, subscribe to our channel or check our community that when I trade these ones for you live in front of you with my screen sharing. Hopefully to see you in the chat. If not, just leave your comment down there and I'll get back to you guys. Thank you. Guys, today market sold off, and as I discussed, there is definitely probably no reason for the market is going to go back up. So market is going to continue, be choppy in the next year until the rates are going to come down. And when the market is really going down, what you can do is you can trade indexes. Leverage ETFs like SQQ, they're actually exactly the opposite of QQQ, but on a leverage product. So today I traded SQQQ for the break of high of the day. Obviously what I saw was that the market was selling off, and because the market was selling off, I could either go short QQQ or I go short TQQ, or I can just go long SQQ. I went long 46.40 and huge pop up on the pullback I added and continued going higher and higher, and as you see all the way up to 48 that I got out completely. So that was one of the best trades that I had. I made really decent profit on that, and after that I kind of was done trading. But as you see here, it went up all the way up to 49.20 when the market really bottomed. And again, this is very important that this price action is exactly the opposite of QQQ. but on a leveraged way. So now I'll bring this one next to each other. I think Santiago can later edit that in a way that you can see. So as you see, the market is sold off. You can actually go long SQQ. So if the market is dropping 1%, SQQ is going up 3%. It's an inverse. The same as the reverse of that is TQQ. So these are derivatives. So the TQQ, for example, here is now selling off significantly. Let me actually put the TQQ. So TQQ is down 10% because the market is down over 3.3%. So that drop is because TQQ is following the market on a leveraged basis on a long side. When the market is dropping 3%, this one is dropping 10%. So now the question here is that, can you draw levels on that? So if you go, for example, on the level on a daily chart, can you find these levels on TQQ or SQQ? The answer to that is no. These are derivatives. These are actually following the price action of the indexes. So if you have to want to find the level on them, like to trade a reversal or something, you have to trade based on the indexes that they're following, not themselves. It's like buying a cloth for your shadow. The shadow doesn't have any personality itself. You try the clothes on. So this is very, very important for you guys to remember. The trade that I did on SPY, it was exactly like based on that. So SPY did a bounce. I knew it's going to bounce from 390.41. This bounce, I was expecting that SPY is going to do this bounce from here. So as you see, there's a double bottom that did bounce. So what I can do is I can go long SPY at 390.41, or I can just look at the SPXL, and as soon as the SPY hits this one, I go long SPXL, and that's exactly what I did. So this is a SPY and this is SPXL. See, as you see here, exactly the trade that you're seeing here. I went long and we just got this from $60 to 66.60 cents. But this level by itself doesn't have any meaning. This level actually came from the fact that SPY hit this level of 39. So that's very important for you to guys remember. So TQQ and SQQ are derivatives. They're only for day trading. They're tracking exactly like the market, but on a more leveraged way. So they're 3 times leverage. So SQQ is for a short. So if the market is going down, SQQ is going up. TQQ is on a long. So if the market is going up, TQQ is also going up, but by 3%. So there are really, things that you should not really hold for a longer term, because if you go, for example, on the longer term, let me actually get rid of these pivot points. So on the longer term, so there, SPY is always going up, but SQQQ, which is following that, you see it always going down because the market is going up and these are constantly losing their value. So the market is extremely weak today. Q is down 3%. We're probably going to continue selling off. Qs are probably going to go to 250. Market is definitely not doing a good time at all, and I think it's going to be a really bad end of the year. It's just because there's no reason for the market to go up. The Federal Reserve wants to shrink the economy. Everyone needs to to take care of their money for now until this cycle goes on and the inflation comes down. Perfect, guys. Thank you so much for watching this, and if you have any question, guys, feel free to email me. Now we'll see that SPY is bouncing a little bit here from this level, but again, I really doubt that SPY is gonna SPY is probably gonna continue heading lower over the Christmas, or maybe just continue chopping between 350 to 400 until the economy comes back into the solid area. But overall, I had 2 trades. SPXL was really, really nice. I did the bounce on SPXL from this level. Just again, the trade that I did here was because of QQQ. Again, it's because of looking at the SPY at that 390 level. And then obviously I had the SQQ long because market was selling off at the open. And I went long exactly as you see, this beautiful move that we got on that. Thank you so much, guys. Have a good day, and see you tomorrow in the chat, guys.